Hi guys, I hope you're good wherever you are. Yet another episode of Bullish Banter with special guest today, a man who is quite experienced in the industry, and I hope you will get to learn a thing or two. Other than that, the usual culprit, Rufas.
Hi guys, Rufas Kamau here. Happy
Yes.
to join this episode.
Yes.
How are you, Sheban?
I'm doing well. Hi, guys. I think I'm the guy they introduced as the new guy on the panel.
Yes.
I'm Sheban. So looking forward to having a fruitful conversation today.
How long have you been in these dreadful markets?
I think this marks my 7th year in trading industry.
Yes.
Yeah. So it's been a journey where I will say full of ups and downs, but we've been able to succeed at some level.
A nice one. I know we were speaking off the camera or the mics, to put it in context, the new iPhone 15. I know we talked about the Apple as a company in investment, and yesterday they launched a new number. Not a new product. A new
Apple
number.
iPhone 15.
Series 9 and iPhone 15.
Yeah.
What piqued my interest in that is not even the new product. It was their quest for ESG and all this environmental product. Picking up from where we left it, Rufus, they are involved in protecting the climate. I think they are using recycled products. Do you think that will prop up their company shares, or it will still keep on?
No, in the US, it's a major thing right now for every corporate. They must adhere to the climate rules, or else they will be charged the carbon credits. So every company is trying to tailor-make their products to appear as if they are green, whether they are green or not. But the most fascinating thing about the new iPhone is that between September last year and September this year, they invested $27 billion in research and development.
Yes.
Yeah.
For a new number.
Yes.
15. They still insist, of course, besides the titanium, maybe the 27 billion went into acquiring titanium because that was the new exciting.
No, that was investment in research and development.
Yeah. I'm not buying it. I don't know what you think about that.
That's an improved camera.
I know you're a Samsung guy, and Samsung yesterday
for
were
me,
trolling.
Yeah, Samsung is everything for me.
Innovative.
I think for me, Samsung remains my top choice.
Yeah.
Although on maybe what Rufus said about how companies are trying to cope with the climate changes and how they need to position themselves.
Yeah.
I think iPhones, they're standing out already. Remember sometime back last year, they had the same issue with the European market.
Yes.
Where they were forced to change their charger type and something like that.
Yeah.
So I think with the new investment in that, they are making the right move.
You know what's funny? They are copying Samsung.
Of course, I know.
No. It was a regulation from Europe.
Yeah.
So they were basically required to make sure that their devices are compatible with the USB-C chargers for them to be allowed to sell in Europe. And now that we are seeing China banning the iPhone devices, the only option they have is to change their hardware so that they can continue dominating the European market.
Yeah, true.
Yeah, no worries. Now, on to the markets. Oil is still going up, gold is still going down, and the indices are hovering wherever they are. Maybe what's your take on today's CPI?
For CPI, it's pretty interesting. There's quite a number of projections from various banks. The consensus estimate is that CPI could rise to 3.6%.
Yes.
In the last 13 months, CPI has been consistently going down from the high we saw in June last year of 9.1% down to 3.0% 2 months ago.
Yeah.
Then in the last 1 month, we saw a big spike in the opposite direction. That's the first time we saw inflation rising in the US to 3.2%. And now, with oil breaking above $90 per barrel, then there's that speculation that prices could be on the rise, and we could be seeing a number around 3.6%.
I don't know what to think about this, Sheban, because for me, there is the overall CPI, which contains the price of oil, which everyone is looking.
Yeah.
But there is another one which personally I'm looking at, the core CPI excluding the fuel, because fuel price going up is more or less induced with the extension of the cuts from Saudi and of course US draining the SPR and everything. And I know you had this belief that at some point the price will go down.
Yeah.
I don't know if you will be looking at the main number or you without the fuel itself.
I think for me, I'm having two approach on the same.
Yes.
I'm looking at where we don't have the oil prices being included, just to see the general performance of the US dollar.
Yes.
But again, we have also to include what happens if oil prices are factored in. Remember, oil is all over. You can't exclude it from the ability of people buying or selling anything in the market.
Yes.
So I'll have an approach, two approach on the same. First, check the CPI without the inclusion of the oil prices.
Okay. Yeah. Now, to today's topic, I know, Sheban, you have been doing a lot of TikToks, and you guys are more out there on social media than I. I
think Rufas is more out there than I am.
Well,
no way. Okay.
He's mentoring a raft of people onto online.
I'm just consistent on X.
Yes.
Okay.
Yes. What is the first, given your experience, your combined experience, and it spans up to 20 years if we add it up, what is the first mistake you made as a trader?
My first mistake, I wanted to solve all my problems with Forex.
Okay.
Yeah. Trust me, I don't know if that makes sense to you guys, but
you can elaborate.
This is what it means. You see, when I was introduced to Forex concept, I looked at the possibility of making money. And I looked at my side, Bana, I needed to solve my problems. Okay. So I was putting in money without getting the right knowledge. I want to make money to solve the current situation I'm in. Okay. So I think that is something I've seen for years, running across every person trying to join Forex. Anybody interested in Forex, they're pushed by the needs they have. Like, you need money, okay? So someone needs money, they think Forex is going to solve that quickly. So that is the biggest mistake.
So how many lot size did you put?
My friend, I push the lot size until I'm able to see you have insufficient funds.
Okay.
Yeah. So with doing that, you realize at the end of it, any retrace in the market is stopping you out on every trade, because you have used literally the whole of your account to create new position, but you don't have anything left in the account to support that position.
Rufas, what was your biggest mistake, or your first mistake rather?
My first mistake was overconfidence. So I happened to have a really good teacher who introduced me to Forex, showed me a couple of indicators, moving average, crossovers. It was a really nice strategy.
Yeah.
So I deposited my first money, started trading, and had a good run where I made like 200% within, I think, the first 2 weeks. So I got so overconfident, and as a beginner, I had these expectations. After you make your first profit, you are like, so if tomorrow I wake up and then I find another position, I can make this. And if I make this, I can use that to make that.
Yes.
So within a very short period of time, I was very confident in the market.
Yeah, okay.
And I just kept going, adding more trades. So when I got out of my beginner's luck, I didn't stop.
Okay.
So I didn't go out to touch grass.
Yeah.
It ended up really badly.
Yeah, nice. I think for me, the first mistake I made was putting my rent money. Remember, I'm a student, and in Ngara, back in the day, they would either do two things to you if you don't pay your rent.
Yes.
Either they switch off electricity, or they turn off water. And you have exams coming up. So I put in my $50 way back in 2014. First year, you are very excited about money. And you go in with the same mentality like you. This thing must work.
Yes.
Yeah, I mean, it worked for a few minutes.
I survived for like 2 weeks consistently, just following the rules that I was taught.
For me, it worked for like 2 minutes before the 3:30 news.
Yeah.
Yeah, before the 3:30 news, and then everything went bust. And you remember back in the day, I think dollar to Kenya shilling was like 80 bob or something.
Yeah, so, around 80 shillings.
And the rent back without inflation, I think it was quite friendly. So from then, I think even as we engage with a lot of traders, we try to tell them the money you put in is something you are ready to lose, for lack of a better way to put it. Yeah. And I think that is how I recovered from it. And for traders, I think we are covering a lot of mistakes, and each of us in our own capacities, we have interacted with traders a lot. Yeah. Maybe what are some of the other mistakes yourself, Sheban, have seen and you have tried to, correct from traders?
I think the common mistakes I've interacted with the traders, what they do a lot, is the lack of knowledge. And lack of knowledge in this aspect, we're saying people are not taking their time to be able to get the right knowledge. Like what Rufas mentioned, he had a very good teacher. But people out here right now, they're not getting that, the urge to push themselves to get the knowledge so that they know what they are doing in the market. Because on a daily basis, I'm talking to guys who are trading. Someone comes on your page, comments something, and you ask a very simple question. Have you ever done classes? And someone tells you, I've just watched videos. And they watch few videos and they feel they are ready to go into the market. So I believe that if you want to venture into Forex, you need to get the right knowledge. You need to invest a lot in getting the knowledge and the skills. Once you have that, you will lose a trade today, but because of the skill, you are able to recover tomorrow. But without the skills, man, even if I give you a whole 1 million, you are going to lose it tomorrow. That's what I know.
Yes. Knowledge. Rufus, you do engage a lot with the traders, knowledge-wise, several aspects, from macro to technicals to, financial literacy, where how much do you allocate? How do you guide those who come to you desperate of success and in a way that you do not put them feel like it is an homework? It is something that will actually benefit them in the future.
Yeah, I try to minimize from the journey that you would have otherwise taken by basically looking at my own personal journey. So I went through the entire 9 yards. This club hopping. But now not club hopping, but
not from what we know.
We believe you.
Hopping from one strategy to another.
Yes.
So I tried that. So after I lost my first account, I tried learning another strategy, moving on to the next. You realize that the retail trader, once they lose some money trading using a certain strategy, they immediately stop using it and then start looking for another strategy, thinking this is the better one. They use it, maybe it's successful for a while, it fails again, they move to the next strategy. So it happened to me a lot. I would move from strategy A, B, C, D. I've gone like a crazy number of strategies, just testing them out, thinking this one is better, that one is better. And eventually, they waste so much time before they become successful. So in my trainings, I try to narrow it down into a very simple, fundamental journey that this is what you need to know. You don't need to do this. You just need to know A, B, C, D. And that basically shortens the journey for the retail trader.
Okay. Now, there is this word, strategy. For me, in simple terms, is like, first of all, how much do I have in my account? Number 2, what do I like to trade? Number 3, which time of the day do I like to trade? And then number 4, patience. Or the length of the position I hold. That's how I call a strategy. I don't know in your terms, Sheban, because I know I've been in a training with you, you normally have some rules.
Yes.
So maybe you can explain how strategy is or is defined by you.
According to me, when I talk of strategy, I'm looking for backing reason, like fact that I can tell someone. Maybe if Rufus is asking me, Sheban, why are you on a sell on gold? I need to give Rufus fact that I'm picking from the market and I'm sticking with them. That if this one happens, then I can take this position. So for me, it's all about the plan I have in trading. am I sticking with that plan? Okay. So for me, it ranges from, first of all, identifying the size of account I have. The reason why I start with my account size is going to determine around 3 things for me. It's going to help me know which asset can I trade on. It's going to help me know which risk level, like the lot size that I'm going to pick in the market. It's going to also help me to understand at a given time, how many positions can I have running. So I start by understanding my account. Then I move into the charts. Into the charts, I have a way I analyze the chart. And I will always stick with that as long as all my parameters has been confirmed. Then I can confidently place a trade. Something that people are really suffering from. You see, with the trading, there's a lot of signal. Maybe they're jumping from one Telegram group to another. You get a trader who's just got into a trade because he saw something from a certain group. Sell here, buy here. But
you saw a tweet from Rufas.
Yes, you saw a tweet from Rufas about maybe dollar index.
Yeah.
So he's not going back to the chart. For me, I tell people you need, before you get the noise, get into the chart. What is the chart communicating to you? So for me, I tell people you need to have the technical bit of the chart, and then you combine it with now the fundamental, the market sentiments, to be able to come up with a plan on how to trade.
Okay.
So basically, you need to understand the market, be able to have reasons that you can tell someone else, it's the fact that made me to buy or sell this asset.
Maybe you can expound on your basics of the chart, the rules that you use.
The rules I use.
Yeah.
Okay, the first thing I do whenever I'm in the charts, I will start with the technical. Remember, Forex, we are looking at the chart because that is the data we have already. Okay? So that is the starting point for any trader. So I normally go for the technical. My first tick point is usually the support and resistance. I have to mark it in the market. If I don't see a good support, then I don't see the need why I should be buying. Because if I'm looking for a good buy opportunity, I will need to identify a good support. If it is a sell, I will need to identify a very strong resistance. Now, that is not enough. I usually add in another parameter of analysis, which I call the candlestick pattern. Now, people are not willing to take the time to identify those candles. So for me, you have to identify something like reversal candle. If I'm able to identify a reversal pattern happening on a strong support or strong resistance, I have reason number 2 to make me go into that trade. Then there is a reason number 3, the closing prices. Now, the reason why we use candlestick in chart analysis is because these candles are able to communicate to you as a trader. You are able to know the open price, the closing price of a particular asset. So if I can be able to identify the candle that is forming on support or on resistance, where is it closing? Reason I'm interested in that is because it will help me to know if that particular trend is ending or it's continuing. Like, how do I know that it's a continuation? So for example, I have a resistance. Then the market is still on an upward trend, touches that resistance, and every candle on that resistance is closing below my resistance. It's already something that I need to be aware that this upward trend is likely to end. Okay? Yeah. But if it closes above it, then I can be sure that there is likelihood of a continuation of an upward trend. So I have 3 that I normally use: the support and resistance, candlestick reversal, and then I have the closing price. Okay. Once I do that, now I move on the market fundamentals. I check the sentiments of the market. Is there anything likely to happen between the time I want to trade and this particular time that might change the movement of the market?
Thank you for that. I think, of course, this is not like a silver bullet to any trader that is listening. It is just an idea. To you, Rufus, by the time you say, okay, this is working for me, how long did you work on your strategy in a way that you're confident any position you take, you have an expected and sustainable results?
Yeah. First, I would like to go through the previous question of strategy. So, to me, a strategy is a predetermined set of rules that basically give you an edge in the market and help you protect your capital. That is basically risk management. So, in your strategy, it sets to answer a couple of questions. One, what is my approach in the markets? Am I a trend follower? Am I a counter trend trader? Do I go against the trend? Am I a value investor? So there are positions you will be taking. If you're a value investor where you hold for a long time, there are positions where you follow the trend, others you go against the trend. So you need to identify that. Once you identify that, you also need to identify what kind of patterns do you normally trade. Do you just trade any pattern that appears in the market? Or what are the predetermined patterns that you're looking for? So if you, let's say, trade breakouts, then that's what you'll be looking for. So you identify the kind of patterns that you want to be trading in the markets. And then third, you want to know what kind of markets you want to trade in. So do you want to be trading in choppy markets, ranging markets, trending markets, and so on? So you need to identify the kind of markets that you're looking for. So instead of sometimes I see other traders defining one asset. I'm a Euro USD trader, and that's it. But then the Euro USD will have different market conditions at different times. There are periods when it will be trending, other periods it will be moving sideways, consolidating, and so on. So for me, the condition is more important than the particular asset you are trading. So once you've answered those questions, then you look at your risk management. How much are you going to be investing per trade? Are you going to be risking 1%, 2%, 3%? You need to have a predetermined set of rules determining how much you're investing per trade. Then you need to look at your trade management plan. So in terms of trade management, what are the rules for you to, let's say, adjust your stop loss? What are the rules for you to adjust your take profit? What are the rules for you to make a market exit? So once you set that down, then the other one is, of course, a mental check. I've had periods where I lost out of money just because I had stress arising from other stuff. So you have your landlord up against you and you're stressed. You had an argument.
Chelsea is out of Champions League.
Manchester were beaten.
Exactly. So there's a lot of things that could influence your mental health and you could end up making the bad mistakes in the markets.
Okay.
So for me personally, the way I approach the markets is by following those rules and trying to analyze the markets ahead of time. So if I'm trading gold, I'll be doing, let's say, analysis, let's say a week earlier. I look at the trend, what's the direction, is there a potential trade setup? And then I'll set reminders, I'll set my analysis right. So if gold plays out as expected, then I will know exactly this is my entry point, this is where I'm setting my stop loss, this is where I'm setting my take profit, and this is the exact amount of money that I'm risking in this trade.
Now, there is a question I think you have forgotten to answer. How long do you put this strategy in testing so that you can say, okay, this is working for me. I'll keep at it. There will be a lot of noise out there. There will be a lot of different strategies you can apply.
Well, this may not apply for everyone, but mine was crafted in pain. You try this, it doesn't work. You try this, it doesn't work. You try so many strategies, and then eventually I narrowed down on something that I actually experienced working, and I just kept on improving with it. So I wouldn't advise a beginner trader to go through all those other strategies. Instead, I would advise someone to, let's say, demo trade, practice different strategies on different demo accounts. You can have as many demo accounts as you want. Try this or a strategy on demo A, another strategy on demo B, see which one is working for you. And this may even include, let's say, executing short-term trades versus longer-term trades. So you see if you are more comfortable or more successful trading trades that you hold for 2-3 days compared to trades that you hold for 15 minutes, 1 hour, 2 hours, and so on.
Now, there is something you mentioned there. Somebody defines him or herself as a Euro USD trader. And there are people, Sheban, who do only gold. If gold is ranging, They are out of the markets. They'll not even bother.
Yeah.
I don't know what you have on that, Sheban. What do you view? Is it like the case of putting all eggs in one basket, or you want to make money from something you're quite confident because your strategy works with it?
I think something I always tell guys, you need to have at least maybe 4 assets or 5 assets that you understand. Yes, sometimes we have guys who really narrow down to trading gold because they have heard how valuable gold is and how good it is paying.
Yeah.
But also they are forgetting the aspect that it's one of the volatile assets, and when you're losing, you are really losing on it. So I always tell people that have several assets that you can look at, because as we talked about trading strategy, I can come on maybe gold chart, try to follow my rules of trading and everything, but I'm not getting the opportunity. So it doesn't mean that I don't have to trade. I can be able to move to a different asset, look at the strategy. Is it actually giving me an opportunity? So I'm a guy who tell people that, yes, you can narrow down to one asset, but be open to be able to look at different assets, because the one that you normally like trading on might not give you an opportunity every day.
Okay.
Yeah. So it's all about how is the strategy working? Are you getting the opportunity?
Okay.
Well, for me, I would say that some of the traders I've seen focusing on gold, it's because of their strategy. If your strategy, let's say, demands that you trade a volatile asset and you enjoy trading volatility, then gold comes out as
The top
clear
asset.
winner.
Yeah.
The thrill of it all, eh?
Yes. So for any forex trader out there, you can either fall in one of 3 categories. Either you are a risk-averse trader, you prefer quiet markets that don't have too much volatility. You can be a moderate risk trader. Maybe you prefer a standard asset that doesn't move much, something like Euro USD. And then there is the risk seeker. This is a high-impact growth trader who will tend to take more risks, but then they focus on growth. So if you happen to identify yourself as a person who has a very high risk tolerance, then you might be more comfortable trading a high volatility asset such as gold.
Yeah. You know, for me, I normally say, so long as your strategy is giving you money consistently, you are right.
Definitely.
You are right. I cannot tell you otherwise, because at the end of the day, you know what you're doing. Yeah. And the performance are there. Now, there is the other aspect whereby I don't know if this is a mistake or it's a habit or it's a philosophy out there which is still being proven, where you say you want to grow an account and the growth base is quite on a sand, $5, $10. Now, or even $1,000. But then again, we are human beings. After your case whereby you have done a good week, you have grown your $1,000 account to, $1,800. Now you say, okay, I'm done with 0.1.
Yeah.
I intend to now go for 1.5. Yeah. In the aspect of position sizing.
Yeah.
It is something that I think, I don't know, for me, I'm paying myself from the market. I don't know about you. Maybe you can elaborate. For me, if I get a certain limit, if possible, I can get it out every day and then you pack it somewhere. I don't know what you view of that.
I will say that is among the biggest mistakes traders are making, because you will realize someone with a small account consistently has been making money because he's been risking small.
Okay.
Yeah, but after growing that account maybe for a period, 0.1 is not good for me. Yeah. So
I'm a guru.
Yes, I think now I'm ready to do more. So this guy jumps from 0.1 to maybe 0.5. Yeah. Now, jumping is not bad, but the question these guys don't ask themselves is, can my account actually continue sustaining that pressure? Because in forex trading, boss, the moment you increase the lot size, the pressure increases.
I think I wrote a tweet about that early this morning.
Yeah.
I'll try and explain it in a very simple way. So let's say there's a very busy street that you cross every day.
Yeah.
So every day before you cross, you look right, you look left, you look right again before you cross.
Yeah.
And if you've done it for the last 5 years, you have never had a major traffic incident.
Yes.
So you have that consistent sense of danger whenever you're crossing that street. So you're careful and nothing happens. But then if you grow overconfident and you lower your guard, you become lenient, then you start doing other stuff. You can be texting, you can be on your headphones when you're crossing the street. And then that's when the risk increases and the potential for you getting into an accident gets bigger.
It's very high.
So to bring the conversation back to the market, I've had this experience myself. I have an account. Let's say I have $3,000. I keep trading consistently, following my rules clearly. If I'm using 0.1 or whatever node size I'm using, or risking, let's say $20, $30 per day, keep doing that for a good period, let's say 2-3 weeks. Then as we approach the end of the month, I become so confident. I switch up the lot size. Then I end up erasing everything I had made with it. Just 1 or 2 trades wipes everything I had made over the month.
Exactly. Yeah.
So the advice I would give to a beginner trader is to make sure that you have that consistent sense of danger. So treat it like a highway robbery, or do you call it a train robbery? So the moment you grab whatever you came for, get out. Just have that consistent sense of risk. As long as you're in the market, just know there is risk. And the moment you start getting overconfident and you think now you've mastered the markets, that's when you start losing it.
I like the way you've put it that one. When you, whatever you get, grab out. I think I like that statement when NFP or today's CPI comes out. If you are lucky enough, thank you, Lord. Thank you, the gods of the market.
Get out.
Thank you, the peep gods. Bye.
And go touch some grass.
Now,
Rufas mentioned something when someone is trying to perfect the strategy. And maybe this is something we can be able to get out to traders. You're working, for example, with a demo, just trying to perfect your strategy here and there. Something I have seen is missing in traders is changing that account size, the demo amount.
Okay.
You're testing your strategy with a $10,000 account.
100,000, 5 million.
Even some of them are using $50,000. But when we move now to the live account, you're starting with the $10, $100. For me, that is one of the problems that we have, because with a $10,000 account, I can open a position right now. I wanted maybe to observe it for a few hours and get out. But again, that trade keeps on running into losses. So what do? I let it run. So I will check this trade after 2 days and it is in profit. You can't do same case on your account with a small amount. So maybe as we teach these guys or we share ideas on the strategy, let people work with an amount that they are able to actually support in the live account, because it means you're training yourself to work with something that you will still be using when you move to the live account.
So you are saying you cannot train yourself to drive using a Ferrari and then you come and get a parcel.
If now, you put it that way,
I think there's a better approach to this.
Yes.
Whenever you're getting into trading, you are entering a probability game.
Yes.
And the best way to rationalize between 2 different accounts is by thinking in terms of probabilities and percentages.
Yes.
So you want to make sure the way you rationalize your demo account, let's say you have $10,000.
Yes.
Make sure that if you're going for a risk and you have a stop loss, if it's 1%, it's 1%. Yeah. So if you make 2%, 2%. So if you trade this account doing the same thing, let's say 3-4 months down the line, and you are up 70%, you rationalize in terms of percentages. So if you end up making a deposit of $1,000, which is way smaller than the account you had in your demo, you'll still think the same way in terms of percentages. I'm going to risk 1% of this account, targeting to make, let's say, 2-3%. Then you keep repeating the whole process. So it's more of a process thinking rather than an amount thinking.
I think that is more or less summed up into psychology or mental space, how you maintain it. I think there was a quote I saw somewhere, like, trading is so weird that today you can be calling all the shots right, and then the next day all the calls are totally wrong until you wonder what happened between yesterday and today. And it will do mental somersaults to you. I don't know how you view this. Normally, when you get into any investment, you want a consistent returns, right?
Yes.
So or maybe when you get whatever you came into the train and left, right? Is it like when you say you want to increase the lot size, you want to maybe diversify, how do you go about choosing maybe what else is there in the market? Because now the results are clearly there. You feel like you're confident in your strategy and of course in your family, career and everything is going smooth. How do you find a way in which that when you diversify into all the other asset classes in the industry, at least you will not have a wrong footing along your starting journey?
I think for me, I will say that you need to be able to understand the assets.
Okay.
First thing, you need to understand where do you want to put your money again. Okay. Let's say I've been working with the oil and it's been okay with me. Now I feel like I want to branch and add something else on my portfolio. I think first it will be for you to understand the other asset, understand them, and then follow up with a strategy that you've been using. Is it actually working the same as on the other asset? If not, you need to find a good strategy that will work for the other asset, so that at least I'm maintaining my trade on oil, which has been profitable consistently, but I'm again now branching into gold. Okay, so as I'm doing that, is what I'm using in gold also working for me? So it's all about first understand the assets and then come up with a strategy that will be able to work on these other assets.
Yeah.
Yes.
Rufus, what about you? I know there is a lot of fintech innovations coming about.
Yes.
You know what I'm talking about.
Yes, I know. So, in terms of the diversification,
Yes.
Personally, I always advise someone to have somewhere where they store their attendees.
Yeah.
So,
Yes.
so let's
We will
say,
ask him where he stores his.
Yes. So once you've made money in your forex trading account, your job, your gig, you need to make sure that that money is working for you.
Yeah.
Yes.
So you can use that to, let's say, expand your trading account. So you have a bigger account size. You can have some money with a longer term view. Let's say you invested in some stocks. You're expecting to redeem that money in 5 years. You could go into other fintech products. You just park your money there and you expect them to grow. So about diversifying, have several accounts where you keep on building with a goal of a certain period of time and a certain amount. Then when it comes to this other side of having consistent results, it can be quite challenging, especially if you're used into consistent results in other stuff. For instance, if you are employed somewhere, then you have a consistent income.
Yeah.
In the markets, it can be a little bit tricky because market conditions change all the time. We have seen the slowdown that especially happens in December.
Yeah.
We have seen very active months like this August. Last August was really good. September, we don't know yet. But there are those periods when the markets will be quite trendy, moving in one direction, and it's very easy to hit positions that are winning. And then there are those times when the markets are just choppy and you're just hunting down, up and down, looking for the right asset that is having a proper trend for you to participate in. So you should be comfortable with the idea that for some time you might not have consistent results in your trading, and that's completely okay. So if at some point the market conditions are not really good for your strategy, you focus on capital preservation.
Okay. Now, as we come to almost close, Sheban, I know you have been in this game for the longest. Perhaps not the longest, but a long period of time.
Yes.
I believe since the GM started.
Yeah.
Now, I know you have been in the market, of course, besides salary and everything.
Yeah.
How do you manage your finances out there to ensure that whatever happens, let's say COVID and everything else?
Yeah.
Where do you keep your attendees?
No, it's good that you mentioned something like COVID, bro. It's something that was one of the biggest eye-opener to a lot of people. I know the effect of COVID were more negative, but I think it was also one of the time people did learn a lot of things. Because if you are just sure about income only, it actually showed you that there's a time that will come that income that you are used to is going to stop. So I think for me, it was also a learning curve, although I never lost my income, but it made me to think that apart from getting this income, where do I put my money again so that it keeps on growing on the other side? So for me, I've been in agriculture. You know that I'm a guy who like
Ugali and others.
Yes, so I've put quite a lot in the agriculture sector, but also with having the knowledge of the financial market. I've really gone into the stocks, investment in financial markets. I'm able to put in my money because I know every day I'm getting something. So what I've looked at is to ensure that as much as I have the income, what if it stops?
True.
Life has to go on. So that's why I've tried to put money in agriculture, I've put money in the stocks. I need something coming in. And also just a normal retail business out here on the streets. So ukinipata I'm having a mayai kiosk, don't be shocked.
Just know you've met the Forex farmer.
Yes.
That's nice.
I have my money somewhere.
A pleasure having you. I hope we can have you again. Maybe your closing remarks and word of advice to the youngings and obviously whoever is listening.
Thanks guys for having me. But what I'll mention as the last thing to traders out here, as I mentioned, this is an industry that will be there, will always be there. Let us take time to be able to get the right skills to help us make money tomorrow. I think with the introduction of Forex market, with the regulation in the Kenya industry, it has really provided an opportunity for everyone. So put in a lot of investment in terms of knowledge, get to understand this market. You understand this, you will never miss to make few dollars. And then one thing people need to know, it's a normal business. So if you lose a trade, don't jump from one strategy, as Rufas said, or for me, I normally talk about hopping from one broker to another broker, thinking that the broker is the problem. Try to identify the mistakes you are making as a trader. Reach out to people. Let people help you to understand. Forex, you cannot master this alone by staying on YouTube videos alone. Reach out to someone, let them be able to mentor you, and then you can gradually do this. Don't be in a rush to be a billionaire in one single day.
I want an iPhone 15 titanium.
You can't get it in a single day.
Obviously, but you never know. Miracles do happen. That's all I'll say.
Sure.
Rufas, your closing remarks?
For me, it's simple. Anytime you're in the markets, treat it like a train robbery. So if you got what you came for, jump out. If you didn't get what you came for, don't stay, jump out. So that's the best approach.
Every week we have new quotes here. And I think you are getting African proverbs wherever you are listening from. I hope you enjoyed this episode. We hope, of course, to continue expanding and sharing some of the ideas. Some of the mistakes have been addressed in a way that there are more or less solutions. Feel free to ask away your questions, comments. We are